So you fought tooth and nail, talked to several brokers, looked at dozens of opportunities, and you have a sim from the broker. You finally got it. Excellent. SIM, confidential information memorandum. You may or may not be at the point where that is nomenclature that you understand. So you get this 30-page document. Now, what the heck? What do you look at and trust? What do you look at and disregard? What's typical? What tricks are played? How to get past them? And the whole concept of looking through one of these is in order to place an offer or a letter of intent on the business if you still like it. And I'm going to take you through the most efficient way to get through this and give some commentary on what to believe and not to believe. So let's get into it. All right. This is for an HVAC business that a client of mine purchased. And I'll walk through some of the things that are here. So they have a list price, how much they want for it, gross sales, which I typically believe, income, which is an ambiguous term, but they're saying it's just under 450, and the business has been around since 2009. So right here, I would trust this and this, not so much this. This I'll firm up in diligence. And as you're seeing a lot of these, there are these like standard templates that the brokers use, which to me are a pain in the butt. They can summarize the information better, but sometimes there's some good information in here. So turnkey, I hate that word because it means you can just walk into it like a restaurant, and that's not the case. Commercial HVAC, okay. Willing a transition period, business to stay consistent. So transition period to me is negotiable. So I'm glad that they offered it, but you were going to get it anyway as a smart buyer. So sales again, income again, let's nothing here. These numbers and assets, the assets are so small, I'm not going to spend a lot of time there. 6 employees full time. Now, another templated thing that you got to look through, which has a lot of the same information, pain in the butt. 2009, we've seen that. Income, we've seen that. No other business is owned by the seller. That's helpful, but not always true. License is required, so you need to either recognize you're going to need to get that or hire someone who has it. 2,200 square foot location. I would skim through this. Not all that important to me. Business debt. Can the debt be assumed? Yes. Assumable. So there's 24K plus 12K, 1,200 payment. Seems high for that, but the duration of the loan may be shorter. Accounting, all I really want to know is do they run QuickBooks? Yes, that's by and large what most people in this industry run, or not industry, but size of business. So that's what you should expect. They're saying accrual. I promise you it's not GAAP accrual. It's accrual-ish at best. There is a bookkeeper, prepaid contracts. Okay, so there's some prepaids here. Some jobs require 50% up front. And then the buyer setting a low expectation on working capital. I ignore that. That's one of those tricks the brokers have is to try to set that low and anchor it low. General info, I can skim through this. These open form questions, what should a buyer purchase? Why should a buyer purchase the business? I'm not going to read that. How do you obtain new customers? That's way more intensive than just this. Competitive advantages, I don't listen to that. Website for advertising, I'm sure there's more to it than that. How would you improve the business if not selling? Send the technicians to more trainings. That's a cost. Continue ed, a cost. Add a salesperson. Everybody says that. TI estimator. So this is bull swank. Total waste of a line in the sim, in my opinion. They do have a work order system, which is nice with GPS. Customer portal for service history. That's solid. Now I'm looking at this overview. So now they're going to graphically depict some of the financials. This is for folks who are less financially inclined. I like the revenue going up and to the right. It seems like good kind of 10% growth. But if you notice, the net revenue or profit, they say that poorly, went up and then down. So I'm cognizant that something happened this year that drove it down. Profit margin is consistent with that. This is a yellow flag for me. So cost of goods sold for it to go from 55 to 54 and then 48, more than likely that's not real drop, especially in this is 2021. There were huge supply chain issues happening that year. More than likely what happened here is that somebody or they pulled something out of cost of goods sold to reduce the cost and increase the gross margin to present it to a buyer and get a better valuation. They've got some SDE and EBITDA multiples over here, but you should know that as good as them. So I wouldn't spend a lot of time there. Profit margin to 25%. These businesses can operate in that zone. So that's fair. Suggested market valuation 1.3. They're asking a little bit lower. Oh, thanks so much for that. We're so appreciative. This is another sort of templatized thing that they have in here. I'm not going to spend much time here because most of this data is repeat. They do some adjustments here. They don't use it in this analysis, but if all these things were positive, they would adjust the multiple up based on this. So that's another trick that brokers have. They list the add backs here. So if I look at 2021, 160K in add backs, that's not unreasonable for a company of this size. Most of it, seller salary, personal auto. So seller related stuff. SDE and EBITDA, we sort of looked at that higher up. There's not much here to spend a lot of time on. This is another template. They're saying that the industry profit margin is 19. That's actually more accurate. So this business is allegedly doing better, but I think this profit margin is likely either operating profit or EBITDA, whereas this is seller's discretionary earnings. And so there's a little bit of a apples and oranges here. They've gone through suggested price, gross revenues, that kind of stuff. They put out some deal options here. After I crafted my LOI, I would come back to this to see if my offer was close to either one of these so I could communicate that it's close to 2 or close to 3. And they break down some of those offers. This is also to help novices get into an offer quickly. So you could just say, hey, I like the business, eeny, meeny, miny, mo kind of thing. Pick this one and go forward. Now they want to tell you about how the SBA is going to look at this, which is something that frustrates me to no end because some of the assumptions here are bogus. So they're saying the purchase price at 1.15, SDE here, working capital, that's negotiable. They're saying you'll go get working capital at 115 from the SBA, which is aligned with them only wanting to leave 50 or 60 grand in the business from a few pages up. Then instead of putting a true salary here, what they're doing is putting cost of living, which is baloney. So this number is inflated. It should be lower because that number should probably be 120. If you look at all the sellers, what he took out of it, it's definitely at least 120. So this is off by 70K, which would put this at 290. Now what they're saying is loan amount and working capital, 10% equity down, 10% working capital. So put those together, 1.042. Interest rate, which is you and the bank, it's likely going to be higher than that in 2023. Loan payments, and then debt service coverage ratio, which is they're always going to want this to be green, but that's partially because they use this cost of living instead of a salary, and so this number is inflated. If it was 290, it'd still be pretty good, but a lot of that comes to some of the add backs and some of that gross margin shrinkage that we saw that needs to be validated through your quality of earnings. Big numbers. They're trying to say, hey, look, with the loan amounts, with your cash after financing, you'll be able to take home 265 annually, which that isn't just for the financial support you need to put in the business to get it up to par. That doesn't account for the stuff that invariably happens when a business sells. There's just not everything sort of comes over in a fixed way. But of course, they want the high number to show you what you'll get. Now they do some of the lazy stuff. So they list all the autos, materials, equipment, and then what you're seeing a lot of these is basically brokers saying, hey guys, that's all I got. I gave up. So here's the P&L. Here's the balance sheet. Here's P&L for the other year. Here's the balance sheet for the other year. All right, so you get the taxes. Again, not much here for you to consume. A lot of my folks spend way too much time looking at the taxes. The adjusted financials are way more important than the taxes. The taxes can fill in some gaps. And we'll talk about that in a different section around really breaking down the financials of a business once you have due diligence information. Right now, you don't. And then a little map of the area around the business, and then disclaimers. So if you see, what we spent most of my time on was revenue, profit, but really skeptical of a lot of things. 6 employees, been around since 2009, a really basic wonky valuation, some wonky SBA stuff that they are trying to inflate what you can take home. It's interesting how they did that, and also a bunch of other fluff that a professional buyer, somebody experienced like myself, doesn't even look at. It's not that it's not directionally correct. It's not that it's 0% useful. It's just some of these questions, like how the guy gets me business, how they're differentiated, what he would do if he was keeping the business. You know, even that section on keeping the business were a bunch of costs and education that I'm sure that if he thought he could put in $1 and get out 2, he would have spent that money. So you really need to dig into that after you get into diligence, when you have hours and hours to speak to the seller. So no need to believe that now, because the biggest sin in reading a confidential information memorandum that really slows you down is digesting those 30 pages of stuff as true. And then when you get into diligence, having to realize that 30 to 40% of those things are directional at best and sometimes inaccurate. And now you have to sort of wipe the slate clean and start over. So that's how you break through a SIM. That's what you believe, what you don't believe, what you need diligence information to know, and what kind of tricks and things do brokers put in there to try to inflate the price and also make you feel a bit better about the cash flow that will come to you than what actually will come to you. So for instance, I didn't talk about it specifically, but that 265 they say will come to you did not consider interest or taxes. So I implore you to be careful about how you read those numbers. So that's it. Next, we'll get into how to take something like this in a SIM form and put an offer together that will maximize your chances of getting the seller to sign it.